morning. Happy Monday, May 2nd. It's already May. Wow, April showers bring May flowers, so maybe we'll see a lot of flowers in our gardens coming up here real soon. So what's going on? Well, most Americans might decide they're going to waste money on fast food, lottery tickets, inconsequential stuff. But I guess if you're Elon Musk, you can waste money on Twitter. $44 billion. Incredible. Gee. I have a hard time wasting $44, let alone $44 billion. Another thing that's going on is, did you see last week, Dr. Fauci said the pandemic seems to be basically over, and then the next day he says, well, maybe not so fast. No wonder we Americans are having problems with the pandemic. We just seems like we're not always getting the consistent story, one that we can really depend on. And the other thing is Russia and Ukraine. First, Russia talked itself into the war with Ukraine. And now it seems like Russia's talking itself into using nuclear weapons. And that's frightening. I mean, Japan learned its lesson with us, and we learned our lesson. But you know what? Unless you learn history, and I guess Putin doesn't know history, you don't know the horrors and the mistake of using something like that. Anyway, let's get to today's topic. So the question is, can an employer pay their employees' marketplace individual health insurance premiums? Well, when the Affordable Care Act first came out, a lot of accountants are not stupid people. They looked at it and said to the employer, if you give your employee a little bit of a pay increase, tell them go to the marketplace, most likely they're going to get a good premium credit for their health insurance. And you, employer, are going to get a windfall because you're not going to have to pay insurance premiums for your employees. Well, that worked for a year or two, but as the individual marketplace get bombarded with a lot of this business, the rates kept going up and up. Do you remember maybe hearing rates in Arizona? I think they were saying they went up as high as 600%. In Illinois, we were seeing 40-50% rate increases. Now we're paying, 4 times what we were paying, before the Affordable Care Act. That's working out well for us, isn't it? But employers were saying, if I give my employees a little pay increase, say $100 a month, and they're going to the marketplace, they get a good credit, it's cheaper, the law says that they have to have it, and I win. Well, as the premiums start going up and up and up, the individual insurance was here, the group premiums were here, now they're kind of right about the same here. But there are situations when it could be cheaper for an employer to look at it and say, Jane or Bill, go get your health insurance through the marketplace and you can save me a lot of money. It just depends on the census and things like that. Is that legal? Here's the answer to the question. Very simple answer. 100% no. Got it? 100% no. An employer cannot pay the premium. If that premium goes directly to the marketplace on an employer's check, it should be rejected by the marketplace. Now, a lot of insurance companies will let the employer pay the premium. They'll collect it because they don't flat out care who gives them the money. However, I have seen a few employers go to audit on that, and it doesn't work out well. So, when you decide to pay your employees' insurance premiums, the best way, the safest way, is just get a group policy. A group policy requires 2 or more employees, as a rule of thumb, under a federal tax ID, FEIN number. That makes a group. People who don't need the insurance because they have insurance elsewhere, that's fine. All they do is sign a waiver. I have it through my spouse. I have it through my parents. I have purchased it on my own, whatever. That's legitimate. But employers do not pay private insurance premiums for your employees. That's a disaster waiting to happen. Well, Mark, if I'm saving money, how can it be a disaster? Okay, so here's what the law says. You have to provide compensation to your employees for services provided. You're not doing it with that. So the other question is, you pay Bill $200 a month to get his insurance, but you're not paying Bob that. Now Bill comes back and says, wait a minute, that's not fair. I have extra taxes I have to pay on the $200 a month you're giving me. Okay? The other question that you have is that can raise your workman's comp cost depending on what your workman's comp premiums are per hundred of income. So the best way is to do it the right way in the very beginning. If you have any questions or concerns, my number as always is right down here. Don't hesitate to give me a call. I'm happy to discuss your situation to see that you're in the best situation possible for you and your business and your employees. So, hey, what's going on here at the MLD Agency? Well, last week we had a really good week. We wrote a number of Medicare supplement policies and a few drug or dental programs, and drug card programs too for our clients. We helped several people transition from their traditional insurance to Medicare, and that's always a double-edged sword, It's always like, oh, thank you, I'm going on Medicare. I can get off of this Affordable Care Act under 65 garbage. How did I turn 65? What happened? And we're still working in the group marketplace. I hope you're doing well. Don't hesitate to give me a call to find out what's in your best interest. Until next week, enjoy. The trees are putting on their leaves here in the Chicago area, and flowers are starting to come up.